Banks. If you're seeking financing to buy a house, you need them. But let me tell you, they're not necessarily all here to do you any favors. I want to make sure that you're not letting the bank steal your hard-earned cash. I'm sure I've caught your attention, and nobody wants their money stolen from them, particularly by the financial entity where they tend to keep it. So I want to break down what I'm specifically talking about, and I'm talking about your mortgage payments. Most people will set up some sort of auto pay with whatever your mortgage is, and it just drafts automatically. But if you're looking to pay your house off early, you might be interested in adding some additional payments. And that is fantastic. In fact, if you can make the equivalent of one extra payment per year, so 13 instead of 12, generally you can knock off like 5 to 7 years on your mortgage, which is a huge savings in interest. But here's the sticking point. If you decide to make an extra payment, you better make sure you do it in the correct way. Because if you just add extra money to your payment, the bank, more than likely, is going to apply that to the interest, which does you no favors at all. You see, when the bank applies it to your interest, it does not reduce your principal and save you any time. In fact, I heard a story from a fellow realtor. Their customer was selling their house and had an expectation of getting tens of thousands of dollars back. He was making extra payments on the house. He thought he only had, $80,000 left to pay, but the bank said, sorry, you never designated where you wanted that extra money to go. So in reality, you owe us a heck of a lot more money. And how devastating is that? So if you do decide to do the responsible thing and save your money and try to pay your house off early, make sure you're doing it one of two ways. The first, if you're doing online payments, make a separate payment and make sure you can designate that as an additional payment. This is the important part, towards principal. Your principal payment is what you want to pay down. Your interest is not what you're interested in ticking away, because that will take forever. So make sure online that you are designating that it goes towards principal. If you're old school and you're writing checks, make sure in the memo line you write towards principal. And I always suggest putting it in as a separate payment, because that way the company that holds your mortgage can determine that you have paid your mortgage, the regular mortgage payment, and then you and the bank can also track the additional payments toward principal. And if you've got the footnotes and the details and anything goes wrong, you can go back and point to those and say you were paying toward principal. So today's video may not have been quite as nefarious as you thought. Perhaps you were envisioning Mary Poppins when Michael gets his tuppence stolen and there's a run on the bank. It's not quite that extreme, but I always want to make sure that you have the right information so that all of your hard-earned dollars go exactly where you want them to go. And speaking of your hard-earned dollars, don't forget to check out my video on how a fixed rate mortgage can make you rich. I'm Lindsey Johnson, your resource for all things real estate. See you next time.